What is up, YouTube? My name is Aditya and welcome back to my channel, The Indian Algo. In today's video, I'm going to be discussing about the phases of Wyckoff and how we can use the Wyckoff schematics in taking better swing trading and investment decisions. So I'm not going to be using this particular video to make you understand about the schematics for intraday users. However, we will understand starting from the swing trading perspective and the investment perspective, and then probably we'll move down to the lower time frames in maybe probably 1 minute time frames, because that's what I trade on 1 minute time frames. I trade Wyckoff on 1 minute time frames using the smart money concepts, combining them all together and getting a proper trading plan for myself. So that's what I'm going to be trying to do for you guys as well. So in this video, we'll try to understand how the Wyckoff schematics work so well for swing trading perspective and for investment decisions. All right, so let's get to the charts. Okay, so we are here on the TradingView platform. So I'll try to explain you all the schematics properly and how you can probably use it for your swing trading perspectives. So first of all, what you can do is go to this particular website and just type Wyckoff Schematic School and you will get this school.stockcharts.com. Go to the first link that you see here, and here on the first link, yeah, like you will find a particular article about Richard Wyckoff. So you can see his date of birth and when he died. And yes, he developed these schematics that you see here, this one, right? So the accumulation schematic that you see here is developed probably 130 years back and is still applicable in today's market. So they work the same way in today's market. So he probably identified how the institutions are hunting stop losses. This phase that you see here, spring phase, is actually the stop loss hunt of these lows. Yeah, so I'll try to explain these things on the chart as well. Even here, as you can see, the accumulation schematic too, in this there is no stop loss hunt. So I mostly trade these stop loss hunts because this is something the market does on a regular basis, and you can notice that a lot of times. So even here, distribution schematic, in this particular schematic you can see a stop loss hunt to the upside. There are probably two stop loss hunts, and then the price move down. So this is what I trade the Wyckoff schematics, but on 1 minute time frames, because the markets are fractal in nature and they work the same way on each time frame. So that's how I like trading these particular markets. All right, so you can first go through all these schematics and then probably restart the video in understanding what I'm going to be explaining here. All right, so as per Wyckoff, what usually happens is the prices move higher. So I'll try to explain everything here. I'm not going to be explaining the phases in detail. It's probably like only few points that are very important. All right, so as the price goes up, this is what Wyckoff calls as markup. So as the prices are going higher, this is what Wyckoff calls as markup, and then you will probably see a small retracement. A small retracement is what Wyckoff calls as PSY, which is preliminary. Oh, I hope this is the right spelling. Yeah, preliminary supply. So what does this preliminary supply mean? So this is where the profit booking is already started off. This is where the institutions are booking their profits. They are not getting into this particular trade. You know who are getting into this particular trade? Us, the retailers, are getting in this particular trades. All right, so that's the reason we are losing a lot of money. Now what happens is that the institutions are already selling this particular stock. What they do next is this: the prices move higher and people would put their stop losses somewhere here, but the price move higher, you may think, okay, we are making profits. But retailers definitely can, like somebody who takes a trade from here to here can definitely make a profit. But there are people who keep their stop losses here for higher targets, and they expect the prices to go higher, but the markets come back down, and this is what happens. All right, this is what probably you get in. So on higher time frames, definitely retail traders who are taking trades here can make profit, but this is not how it works. All right, so probably on 1 minute time frame, if you're gonna trade this particular stuff, definitely your stop loss would be hit, because from here you would be expecting the prices to go much higher, but the price come back and hits your stop loss. Do you want this? No, right? Nobody wants that. Now what happens is that as the prices are here, see already the markets are already selling this particular stock. Now as the markets are here, what can we see? Let the market create some sort of highs. Let the market create some sort of highs. Also, yeah, I forgot this particular phase. You will see widespread candles here. You will see widespread candles here, and this is what we call buying climax. This is what we call buying climax, because who enters here? People who thought that they have missed the trade here. They have missed the trade here, and they enter here. I will show you why this particular thing that's developed 130 years back works still perfectly in the market, and we have one of the best examples, and that's Bitcoin. All right, so I'll go to Bitcoin in a while, and I'll show you how I predicted that from 30, yeah, from 64,000 probably. I was expecting a fall till 30,000. All right, I'll try to show you that as well, because I have it in my Discord server. So I have a proof that it was dated way back and then what I was expecting. All right, so we'll go to that particular chart as well. But what just try to understand the psychology here. We are trying to understand the psychology. We are not drawing any support resistance. We are not drawing any other bullshit. All right, we are not drawing any trend lines. We are just understanding this particular schematic. Now what happens as the prices move higher? We get BC. BC is what Indians can relate, not what you think. So BC is buying climax, and the prices falls down. This is what we call AR. As the prices falls down, this is what we call AR, which is probably automatic rally. So after buying climax, we get an automatic rally. This automatic rally is produced because of profit booking. All right, this automatic rally is produced because of profit booking. Now what happens is that, as you can see, there's a high already created. What the market would do is create more highs, create more highs. So these highs is what the markets call as test. All right, this is something that the markets call as test. Then the markets move higher, hunting this particular move, hunting these particular highs. The markets will move higher, hunting these particular highs, and you will see here upthrust. This is what we call upthrust. Okay, now there are two schematics where you'll probably see a upthrust, or the markets will hunt the stop losses again, and this is what Wyckoff calls as UTAD, upthrust after distribution. This is what Wyckoff calls as UTAD, upthrust after distribution, right? Now this is where I look for sales. This is where I look for sales. This is where I look for sales. This is where you are supposed to be looking for sales. Then the markets come back, does one last point of supply test, and falls back down. Now this is your complete distribution schematic. This is your complete distribution schematic. One second. Come on. Yep. So, all right, so we have it here. Okay, so this is your complete distribution schematic, and this is how it's gonna look like. All right, this is how it's gonna look like. Now I'll show you the same schematic in Bitcoin in a while, but before that, let's complete all the schematics here. Now what you will see, okay, so you have already understood the phases here. Now what you're gonna see is this particular move right here. It's called, so again you will see equal highs, stop loss hunt, prices comes back, you get to see this last point of supply, and this is where you sell. Now you need to identify these phases, and that is very important. If you cannot identify these phases, you cannot get into this particular schematic, which is totally fine. Okay, it's not necessary for you to know all this particular stuff. You can definitely follow what you have been following, but this is something a lot of people have been requesting me to do this, so I'm gonna be like, I'm just trying to explain it for them. Now as the price move down, all right, sorry, this is what we call redistribution. All right, this is what we call redistribution. And now what, the prices move down. So this particular whole move down is what Wyckoff calls as markdown. I'm sorry if the schematics are not I'm not drawing it properly, but just try to understand. Okay, I'm making things raw, but I guess I am able to explain things pretty nicely. So okay, shouldn't say all that by myself. Yes. So as the price moves down, what do we see here? The price move down and the price starts consolidating. This is where the prices are creating equal lows. Now there is something else that's happening here. So as the prices move down, one second, sorry, yeah, as the prices move down, you will see a small retracement again, and this is what Wyckoff calls as preliminary, one second, yeah, preliminary support. So this is where the institutions are buying. So this is where the institutions were selling. This is where the institutions are buying. Now, what you see, uh, what do you think? Who have missed this particular move? Us retailers have missed this particular move because probably we do not understand. We are always waiting for the breakout. We are always waiting for the breakout, right, of the ranges, and I initiate the trade when I'm inside the range. I understand these phases, I understand this particular last point of supply, and then I initiate this particular trade. And this is what, if you can do, it's very, very high probability for you, for your trading setup. All right, so I'll try to show a few examples as well. Now, as the prices move down, what do we see here? Preliminary support. Now, as we had buying climax, this is where you will see widespread candles, and this is what we call SC. SC is what? Selling climax. Now if there is a selling climax, what do we call this? Again, this is your automatic rally, because this is where the profit booking is occurring. People, okay, yeah, so this is where the FOMO traders are entering, fear of missing out, and they are trying to enter this particular trade expecting the price to go higher. But what happens next? The prices come back, the price go higher. Now the prices are consolidating, creating probably a test. Yeah, so this is what we call ST is secondary test, secondary test. Now you can see there are equal lows. All right, now you can see equal lows. What the price does, goes back higher, probably comes back, hunts these equal lows, comes back, you get the last point of support, and the prices go higher. This is how Wyckoff works. You can understand these phases. Right here you have your LPS, and yes, this particular stop hunt, here we used to call the stop hunt as upthrust after distribution, and this is what we call as spring. All right, we call this spring. The prices move higher, we get a breakout, and the prices are here. So what are you gonna see here? Mostly equal lows, spring, price come back, you get an LPS, and the prices moves higher again. So this is your redistribution, sorry, reaccumulation. This is your reaccumulation phase. I hope these points are clear, so that I can now move to the charts and try to explain you. Even if it's not clear, just try to go back in the video and yep, just try to understand what I just explained here. So we just need to understand these phases and expect higher prices. So now I'm going to be showing you something very, very, very interesting in Bitcoin, which is this particular schematic that just happened. And that was the reason I was bearish on Bitcoin even before anyone else. I mean, like, I obviously people did understood, but yeah, the retailer mindset, who were expecting this to be a trend line and expecting the prices to take support from here because they think that every dip is a buy, bullshit. All right, so let's try to understand these phases of what this particular Bitcoin is doing here. So here, if you can see this particular phase, it's very clear to people who know Wyckoff is PS. So this is where people, the institutions are already booking their profits, but what the retailers are doing, the young generation, right, the Gen Z, were trying to buy. Yeah, okay, so they weren't able to buy here as well. They weren't able to buy here as well because they probably do not know if the price will go higher from here. So what? So we'll discuss about where did they buy. So as the prices are here, this is what we call PSY, right? PSY, preliminary supply, and the prices falls off. All right, now if you see, there is a very huge move here. There is a very huge move here, and the prices move higher, very high, very high. This is where the prices are currently, right? This is where the prices are currently. So this is what we call buying climax. This is your buying climax. This is where every retailer was probably getting in. People who do not know about how stock markets work, they were buying this particular cryptocurrency here, and this is very clear to me that this is a buying climax. After buying climax, it's probably going to be a reversal. See, it's not confirmed as of now, but uh, as a trader, I will never buy here. I will never buy here. So the price moves down, we get an automatic rally right here. We get an automatic rally. Then the prices move higher. This is what we call as the test, right? This is what we call as the test. Now, if you see what is lying above these particular highs, what is lying above these particular highs? Obviously, stop losses. So somebody is also selling here, right? They are probably selling early, so that's the reason we have stop losses here. Now the prices are here, and you get what? Upthrust. Very clear upthrust. All right, very clear upthrust. Now I can see these lows. What do we have below these lows? Very, very clear. We have stop losses below these lows, because who was buying these particular dips? So everyone who probably do not know how the stock markets work were probably buying these dips, right? They were buying these dips and putting their stop losses here. Now what the market does, it comes back down. This is where, in this phase, I was very clear that the markets are gonna crash. So at this particular point of time, I take somebody that, okay, so I also started putting up stories that Bitcoin is gonna be touching 30K very soon, and yep, no one took it seriously probably. No, no, I mean, like, my mentees definitely took it seriously. There was one guy I was speaking to. He told me that crypto 30K is not possible at all, because it's at 64,000, and 30K is half the value of Bitcoin, half the value of Bitcoin. But we need to understand all this. Markets work in a structure. Before any news could come out, the markets were already telling us that it's gonna fall, and then you got a news of, see, you did not get a positive news, you obviously got a bad news, because the markets first have to go down and then go up. So probably after here, you may get some good news spring, and then you can buy it. Yeah, you can definitely buy it, but who knows what's going to happen, right? So as we get this particular move, this is where I should be looking for sales, and nobody I guess was looking for sales here. So that was one mistake which amateurs do, right? Now I'll try to show it to you. All right, so can you see this particular chart? We have the screenshot here, May 13, 2021, 11:28, right? May 13. So May 13, the prices were here. So I guess I already understood that the prices are gonna fall from here, and that's the reason this was the structure that I've marked, and this is where I was expecting the prices to fall, 30K. Now what we see after that, just after that, on May 19th, all right? So this was drawn on May 13th May, and this is what we have on 19th May. The prices touched 30K. We also got a bad news, and that news was the China has banned cryptocurrencies, I guess. Yeah. So this is what we can understand by Wyckoff. Also, now let's go to the interesting part. Reliance. All right. So we have Reliance right here. Okay. So I've already marked everything. I've already marked the phases, so I don't think so I'll have to redo it. But we'll just understand here. So if you can see what the markets are doing, the markets fall off from here, and we have PS. PS. So if you see, there's a small retracement. There's a very small retracement, and look at this particular huge fall candle, huge bearish candle. That is what? That is clearly indicating selling climax. That is clearly indicating us selling climax. So this is where we need to be ready. This is where we need to be ready for buying higher prices, but obviously not at this particular phase. Obviously a swing trader or an investor shouldn't be selling here. This is where he need to understand that the prices can turn bullish at any point of time, but obviously from 5th November to now is the time look at how long this particular accumulation phase is, and we can definitely expect higher prices, very, very, very higher prices. Now, why? What is the reason? So we get automatic rally. This is where the profits are booked, right? This is where the profits are booked. The market, the institutions book their profits right here. Now, as the prices move down, what do we have? ST, secondary test. The prices move down again, we get secondary test, and then we get a spring action. This spring action takes out all the lows that we have here. Liquidity, right? We have stop losses just below these STs. Now what the market does, moves higher. This is what we call sign of strength. Obviously it has a lot of strength here. That was the reason the price went pretty high. Now after this sign of strength, what the market does, comes back for the last point of supply, sorry, last point of support in this case, and this is where we should be in this particular trade, keeping our stop loss somewhere here. So if the market goes below this, get out of the trade. But if the market goes higher, so obviously this is what this is, and a phase of accumulation, right? I'm not sure. Yeah, so it's probably reaccumulation, because there was some sort of accumulation that would have happened here. Now the prices are in a phase of reaccumulation, and we can ease, like, Reliance is on a bull run now. That's what I believe. Obviously I can be very wrong. I can be very wrong. The prices once breaks below this, I am wrong, and I will accept that. I will accept that. I'm putting up this video on YouTube, so you will always have some evidence that I went wrong in this particular case, and that's totally fine, because I'm not putting in my money here, and even if I would have put my money here, I would have taken a trade here. All right, so this is something that I figured out on like a day before, right? 21st May. So I was very late, but if the price comes back here, I may be a little interested in buying this particular trade for higher prices, and the prices can definitely go very high, breaking the all-time high. Simple reason: who has stop losses here? Institutions have stop losses here, institutions have stop losses here. So obviously institutions fight with institutions. This is how your trend line looks like, right? I do not like trading trend line. So anybody who is trading trend line would wait for this breakout, but bullshit, boys, we already have an entry here. We already have an entry here. You do not have to wait for this trend line breakout. Also, people who trade support and resistance would wait for this high to be taken out, but we don't need that. It's not necessary. We can simply understand that, okay, here we are very bullish at this particular point of time. This is my last point of support, and if the prices breaks out of this range, we are very bullish, so we can definitely take a chance. Also, I'm very, very sure that the prices will touch 21990 very soon. Also, if you will be taking trades on the basis of what I just said, you will be held responsible for your losses. I won't be held responsible for anything. So this is a disclaimer that I should be putting on in the start of the video, but that's all right. Okay, I'll just put it in the description. Make sure you do not trade unnecessarily without understanding what the markets are doing. All right, just, and also make sure that you are properly managing your risk if you are trading these particular markets. All right. Okay, so I really hope that you understood what I was trying to explain here. You can definitely move down to 1 hour time frames and 4 hour time frames in understanding how the markets work as a swing trade, like how the accumulations work on the basis of how the Wyckoff phases work on the basis of accumulation, reaccumulation, and all of that stuff. So even here, I'll just show you an example of how you could have captured this particular move. So it was an LPS on daily time frame and a Wyckoff accumulation on 1 hour time frame. So if you see here, I'm not going to be naming the phases as of now. I'll just try to explain you here. So this is where we get a little pause and we get a gap down just after that. So this little pause is what we call preliminary supply, right? This is what we call preliminary PS, right? Preliminary supply. Now the prices falls down and we get SC. SC is what selling climax, right? And the price moves higher, we get AR, and then we have lows, what are these? ST, and then we have spring right here. This was the spring, right? The price moves higher, this is what? SOS. Price comes back, this is what? a daily time frame LPS and a 1 hour time frame LPS, you could have bought this particular stock here, putting your stop losses here, and expected higher moves. So this is what I am expecting. I am not a swing trader, so I do not trade all this, but this works much better than what I do on 1 minute time frame. This works much better, but you'll have to understand, you'll have to put in some sort of time and energy in this particular schema, in understanding these particular schematics. See, it's very easy to understand these trend lines and what everyone else is doing, but it's very tough to understand. And like, it's okay, with time definitely anyone can be able to figure out all this stuff. But what I used to do before is this thing, right? And even if you guys must be doing the same thing, you get a breakout, you buy, the price comes back. No, this is not what you're supposed to be doing. And then you say to yourself, oh, this is a retest of this particular trend line, so that's why my stop loss got hit, so I'll enter here now and I'll put my stop loss here, and the trade goes in your direction. Definitely, yeah. But why to take that particular stop loss hit, right? Why to take that particular stop loss hit? Let the price come back, because you know that the as per Wyckoff schematic, this should be the last point of support, and if I am able to buy my position here, this should be my stop loss. I can expect higher prices till here, and this is what I'm saying. If I would have entered here, this would have been my target, because we have stop losses here. Now we have stop losses here as well. Even on these highs, we have stop losses here. Now it's looking like another channel. This is where everybody is buying. Now traders would come in at this particular point of time, but will it be worthy? No, it's not going to be worthy. Breakout traders are going to be trading this and this move. But if you understand Wyckoff schematics properly, you can easily take trades here and expect higher moves. So with very less accuracy, let's say 40 to 50%, you can be profitable in the market. So I'll end the video here. I hope you guys really liked it, and yep, if you liked it, just go ahead and share this video with as many people as you can who are new to the market, who have probably lost some money in Bitcoin. They can understand what was the reason they lost some money, because it's not that nobody is against them. It's just that you need to first educate yourself. If you cannot educate yourself, there's no sense that you will make money. Obviously, getting like rich in a single night, it's not possible at all right. So that's what I started off with, understanding that okay, I can make money, I can get like 10% return, 20% returns in a day, but that's not possible. All right, so just go ahead and share this video with as many people as you can. I've shared the example of Bitcoin, and I've also shared the example of Reliance. So distribution, accumulation, everything has been covered in this particular video. I hope you liked it. Go ahead, smash the like button, share this particular video, and subscribe to my channel. Thanks a lot.